in investing and your experience.
Yeah, hi. I'm Dr. Balasubramaniam. I'm UG batchmate of Dr. Srinivas Rajkumar. I have been doing mutual fund investing for past around 8 to 10 years. I have doing the stock selections only for the past around 5 years. I usually restrict myself to high grade stocks and value oriented stocks. I do not go into intraday trading or options or any commodity trading. My usual fundamental analysis is only through mainly by Graham's book, my basic foundation, uh, the intelligent investor. I have actually 3 rules, uh, just like what the book says. Never to buy or hold any securities through means of borrowing. Never increase the proportion of funds in common stocks. And if there is any, market fluctuations, I will try to keep my common stocks around 50% of my total portfolio. I actually got introduced into the world of stock market through my maternal uncle-in-law. Maternal uncle. He actually he's an engineer. He's now in abroad. He just showed me his portfolio, what he could do uh, using money while investing it. So as and when the time goes, I too saw few losses. Uh, I also gained my experience from it, and I could learn a lot from it. And then I started investing. Now I usually restrict myself to equity, direct equities through stocks via demat accounts, and I have been continuing my SIPs in certain mutual funds, and as such, it's going on. I would like to hear from all others and also their experiences from what they have learned, so it will be useful for all of us. Thank you.
Thank you, Dr. Balasubramaniam. So, with such long experience in the market, do you have any exposure to futures and options, or it's only equity?
No, I actually prefer only equities. I do not have any kind of experience towards options or any other thing as such. So I just restrict myself only to direct equities and mutual funds. Mutual funds I have been continuing for the past around 5 years, and I have seen very good returns even in large caps. What the other articles or the other things they have published regarding certain mutual funds, I have got even much higher returns even in large cap. It's maybe around 25 to 26%. I have got it. I know it may sound bit exaggerated, but XIRR returns, it's around 22 point something in my current portfolio. I have seen a few losses in certain mutual funds, but I think it's okay, and it has catched up after the COVID wave.
Okay, so like the real fact is mutual funds were lagging behind, and only because of this COVID kind of superlative performance, most of the mutual funds were able to perform actually. Even if we see the overall performance pre-COVID, most of the mutual funds did not perform as expected. Even many mutual funds found it even difficult to cross 20%, if I'm not wrong. Only because of the like post-COVID performance of like equities, because of the liquidity, they were able to like perform decently well, and because of the frequent shuffling they were able to do after COVID, because of the large inflows they were able to perform. So you mean to say like your equity portfolio has like performed decently well? That's like about 20% is a very good return over a long term. So how what is the duration for which you have been investing, Balasubramaniam? I just missed that.
Yeah, I just started my investing during my post-graduation, starting of my post-graduation. It's around, now it has been around for the past 5 years.
Good, nice to hear from you. So during the COVID crash, what did you do?
No, I just sat tight. Many of my portfolio went to red. I just knew that okay, it was actually a temporary measure. I just identified the growth stocks which we definitely be benefited. I just analyzed it in a very fundamental basis. I just also examined their companies, their balance sheets and everything. So I could see that I also did a peer comparison between the next companies and also a sector-wise comparison. So I just invested in the company which I could find it was available to me at a very good discount. So I felt it, even though I could feel it. I didn't invest everything in one go. I just gradually introduced my portfolio, increased my portfolio step by step, and I just diversified it with along with two other competitors in the same sector, so that my portfolio does not, toggle up when anything goes wrong. So I just diversified it. So I think it holds good till now.
Thank you, Balasubramaniam. So it was like
Yeah.
and the usual top three investing, like sector leaders, you just diversify among the sector leaders itself.
Not essentially the sector leaders. Few companies actually did it come into highlight in the pre-COVID era. For example, I would like to highlight Aarti Industries, which was available at a very decent valuation. Many stockbroking companies did not recommend at that time. At that time, I took it around at an odd levels of around 270, I think. Now it's around trading at about 1,200. So it's almost 500, 400 to 500% rise within it's in a period of around 1 to 2 years, 2 years, I think so. These kind of companies actually the broker managers actually they don't highlight because they need to do a lot of researching before they could give us their tips. Um, I actually get these things from different friends. These friends actually they give me a few companies. I would like to analyze it. I also got help from a company called as Catalyst Wealth. It's so they also give me recommendations. I also read their balance sheet, how they examine it. Then, if I am confident enough that it's good, then I will invest, but in a staggered manner. Thank you.
Some assistance from other like kind of analysts also, but you also perform your own due analysis before investing. So if you have got like such superior returns of 400%, but still you say your overall portfolio gains is somewhere close to like 2 digits. So how do you like kind of do the position sizing part? How much percentage do you allot based on your own super convictions, even when you feel that they are available at deep discount?
Yeah. Um, Regarding your question, I actually, size my portfolio uh, of these three things. That is, all these common stocks. For example, the Reliance, SBI. Usually they do not fluctuate too much. I will keep it around 50% of my total portfolio, and I will just hold on to it. The rest part, which the value part. Um, for example, even now I hold Manappuram Finance. The Manappuram Finance has almost lost around 30% of its value within a period of around 1 or 2 months. Almost it's around I'm sitting in a loss of around 30% in that. But still I am buying it. Just because I knew I have the fundamentals of the company. I knew it. Even after the war, after the gold prices hit a surge, definitely because of the war, these kind of companies will definitely be a jackpot to me for everyone who is holding it, because eventually the gold prices will hit a high. The portfolio management, as far as I'm concerned, based upon my own judgment. I will reserve it around 40 to 50% of my portfolio assets. Thank you.
Mix of your own analysis and also holding like kind of Nifty 50 stocks. So overall, like anyway, your performance will average out both on the downside and upside. You will have decent performance without much drawdown.
Yeah, definitely. In the long run, the index or Nifty is essentially going to climb because I believe that in the future, India is going to develop. It definitely become a developed country. So I essentially think the Nifty will rise, and going the rest of my 50% of my portfolio through the value stocks after due deliberation and consideration. I think it will definitely be a very good. It will definitely achieve a very good return. Usually, actually give a huge punch to my portfolio. Thank you.
So do you follow any specific time horizon? Because even if you do fundamental analysis, there is a time lag before the market discovers the true value, right? Even you said that you discovered the true value of Earth Industries very early to start with. But it's a matter of, it takes time for market to actually discover the value, right? That is when the momentum comes, and it can come anytime, right? You will be holding for a long, long time. So what is your average holding period, and for how long do you wait for market to catch up to the real value of the stock?
Yeah, regarding your question, I know I actually don't mind about the market catching up because uh, only when the value rises up, the stock gets to be seen by all. But if the fundamentals of the companies are good, fundamentals, it's a very broad term. In order to deliberate it, in order to expand it, see, the management of the company should be good. There should not be any, gross mismanagement, or there should not be any extra debt in the company. Debt may be there, but it should be contained by the own management. Regarding the shareholders and all the patterns, how much they do have, how much they have pledged, and how much they are sold off should be seen regarding these fundamentals. Only after seeing it, I will usually buy. The lag of time between me and the market identifying it is almost a period of around a year to 6 months. The average holding pattern of a stock for me, it's a minimum period of around 5 years. I have sold probably almost 2 or 3 stocks from the day I have bought and till now I have sold off. The brokerages actually they do not gain a lot from me, to be very frank. Thank you.
Okay, so you have a very, very low turnover rate. You have just sold like 2 to 3 stocks in a span of like 5 years of your investing.
Yeah.
Okay. So you are basically planning for long term. So you won't sell until like something drastically changes in the company. So what are these 2-3 stocks, and what made you to sell them, right? Because you are a very high conviction person and your horizon is very long term. So if you had abandoned a few stocks, what are the reasons? We'll be like kind of very curious to know about it.
Okay. Actually, it is not a recommendation. I just sold off it. At that time, I had my own financial commitments. There were also certain aspects which were turning, which was actually turning a bit worse in the company aspect. So I had a little bit of doubt in my mind. So I thought it will be better off to get rid of these stocks rather than by holding it. So I got rid of actually Kotak Mahindra Bank. Actually, it was a very bit of a blow to me. The second thing, which I could, which I would get it out was Alchem Labs. That are the two stocks I could get out. The last thing was cement company. It was called as Mahahut Pro Cement Company. Uh, it was actually going out of focus. The management was also not good. So I went out of the company. Thank you.
Okay, that's quite interesting to hear. So, at what levels did you exit Kotak Mahindra, Alchem Labs?
Yeah. Hello.
Yeah, I would be interested to know, like, if you can share the levels at which you had exited those companies.
Okay. Actually, I kind of exited Alchem Labs at around an odd levels of around 2,500, 2,600, something like that. I could exited Alchem Labs. I sold a major chunk of it. Then Burnpur Cement. Actually, I think nobody could heard. Nobody will be hearing it off. I exited it around on an odd levels of around 7 rupees. At that time, the stock was around 11. It was actually a penny stock, more or less to say it. Then Kotak Mahindra Bank, I sold it around actually could not remember around 3,300 at the order in the 1,300. Thank you.
Okay. So, what is the fair valuation for a stock, right? So, when market discovers the value, the price of the stock actually overshoots its real value. For example, you have bought a stock which is underpriced. So when the market discovers it kind of overshoots, then it may kind of like normalize. It may be somewhere close to the real value. So do you would you be kind of tempted to take advantage of your booking profits when stock kind of overshoots the value which you have in your mind, right? Based on some ratio and other calculations, you would have a fair price, right? Right now it's trading in this level. If it reaches this value, it has far exceeded its real value. So would you exit or still hold on? Still hold on. For example, Mastech and other IT company stocks, they had overshot to a kind of tremendous level. Then they fell down and then they kind of stabilized. So during such very exaggerated steep rise, right? They say that parabolic moves are unsustainable. We obviously know, right? Markets are mean reverting. Anyway, they will like come back to their mean. So are you tempted to kind of book profits, then again buy back at a lower levels, something like that?
Okay. Regarding your question, I am still an investor in Mastech since you have just asked me about it. I'm still an investor in Mastech. I used to hold my stocks there. I have not sold off any Mastech shares as of now. And also its closest competitor, Persistent Systems, both an IT company. They also have they are an intense competitor in winning contracts all over the globe, especially in the US healthcare sector side. They have won very good contracts. I actually discovered these stocks a bit, actually a bit late to me actually, but I bought it out, and I also have I am sitting on a decent profit right now. These kind of stocks usually present to me, by these kind of channels, by these kind of meetings, and through my value research companions. Um, these stocks usually get to me up to a certain point. Whether I am tempted to sell them off when it reaches a high, as per this question, no. If the fundamentals of the company is holding tight and it's essentially it's good, no. If I will keep the company stock as such, because the market fluctuations usually happen. The market fluctuations usually happens when mainly because of the supply and demand basis. When the demand goes very high and the supply falls off, then usually the price of the stock automatically rises up. It can happen even when a mutual fund dumps all these stocks and goes and buys another stock. When a large investor goes and buys these stocks, they can artificially hike up everything. So if the fundamentals of the companies of the stock remains good, I will actually hold on to the stock. If you can, no, that goes on the Warren Buffett saying, if you cannot hold on the stock to 5 minutes, you cannot, for the 10 years, if you cannot hold on stock, don't hold it for 5 minutes. That's it. That's my principle. Thank you.
Okay, that requires like tremendous conviction and also analysis of the stock. So Balasubramaniam also endorses Warren Buffett's opinion that you have to hold the stock for long time to actually get some meaningful returns. So all the new investors who have entered the market after COVID, uh, what do you do when a stock doesn't move for say like a month or two? So new investors can answer. How frequently do you check your portfolio, and what do you do when the stocks don't move? So the current pandemic times, so after seeing the market for long time, when you were seeing such rapid movements in stocks like during COVID and after COVID, did you kind of strike at a realization that the market has changed? Or this was a usual pattern, like market used to behave this way for a long time?
Yes, yes, Vasu. Starting from the beginning of the stock market, uh, based upon my experience in the recent articles, all the articles I have read, these kind of stocks, these kind of crashes usually happen when the market goes through, any kind of apocalyptic events, as such you say, uh, especially during the Meta scam, the 2008 US market Lehman Brothers crash, and every other things it follows on. Usually the Nifty and every other things on an average fall at around 16 to 16.5%, from what I have noticed. It usually falls down, and after 3 months, it usually bounces back. An average takeoff time is usually 3 months, and you get a profit of around 30%. I'm just saying only with the common stocks, you have a profit of around 30%. These kind of common stocks which you can buy at a relatively lower valuation during the market crash serves you it gives a very huge returns after a period of around 3 to 6 months, because during this time the persons who have invested in the share market, they tend to, most of them traders, they tend to get out of the share market and say they sell all these shares, and they take all of the money and then go invest in gold. Usually the gold prices or the everything that goes high. So if you take a contrarian view, if you get a share very relatively lower valuation during the crash times, I think it's pretty good and nice. And eventually the
There was some interruption, Balasubramaniam. You can continue. Nirmal, you can mute yourself, or like I'll be forced to remove because there is so much interruption from your side. Balasubramaniam, if you are able to hear, you can continue.
Yeah, during the period of crashes, I just hold on to my portfolio, and I just bought few of my stocks. These very common stocks, not introduced myself into any kind of research oriented thing. I just bought these common stocks which was available to me at a relatively lower valuation. At that time, I could easily buy it off, and when the market rises up, I could see green all over my portfolio, and I am just keeping it on still. I have not yet exited from these stocks, and I'm just holding it on. These are fundamentally sound and strong stocks, which you can hold it. I am just holding it on till now. Especially these crashes, I think, are actually a very good opportunities for us to buy. Thank you.
Thank you, Balasubramaniam. Like, I really appreciate your clarity and your way of investing. But to kind of always take the contrarian side, I want to ask like questions to others also. So when you are so confident about company performing so well, right? The very purpose of companies issuing equity itself is they themselves are unsure of how much profits the company is going to make. That is why instead of going the bank route, for example, they can go to bank and get loans for say 6%, 4%, right? Anywhere between 4 to 6% would be a good deal. Like I think big banks would be ready to finance them. So any company who knows beforehand that they can make superior returns, superior profits, so that their valuation would catch up, can actually buy back their own shares and borrow money from banks rather than kind of distributing equity. So we as retail investors, being so confident about our own analysis, don't you think it's a little bit of kind of gambling sort of to buy equities when company themselves, the very purpose of somebody kind of releasing equity is because they don't have faith in their own forecast for the future. What is your take on it?
Yeah, I got your question. Uh, the basic essential of issuing an equity is necessarily is to raise funds. I do accept it, but that doesn't actually. What I feel is that uh, that doesn't mean that company needs money just because that it doesn't perform. Uh, Suppose if a promoter issues stock list listing in an exchange, that doesn't mean that I think the company is not performing well, because only if the company performs well, I think the market will react and take it out. For example, you could see how it has happened over a period in case of Paytm or in case of Zomato and every other things. Uh, uh, you know, uh, the equity as such, it has an inherent risk. In the inherent risk, which I mean is that the external factor is the market risk, which gets associated, and the external factors and also usually play a role. As far as the promoter side, I think issuing shares is actually beneficial to them, because by means of speculating and means of day traders, they suppose if they could get a huge value out of these stocks which they have issued to these exchanges, and they will actually offload some of their own promoter holdings. I think they could easily get out all the money, and they would even move out of their sector. That is why during this kind of balance sheets auditing, I could feel the promoter holding is an essential part which I should look, and the pattern of promoter holding which I should look. Then the regarding the director board, are there in the director board only are there relatives present, and which auditor has been doing these kind of things. For example, the auditing got, it's a very good error. It occurred in Satyam company. I think we all know due to the Satyam scams which had occurred. I actually see the promoters holding. Suppose if this promoter holding has gone down to a significant extent, then I could feel that something is wrong with the company, especially after issuing an IPO. If the promoter holding goes down significantly, then I think the stock is not for us. Thank you.
Thank you, Balasubramaniam. So this is very important, guys. See, he has highlighted the real need for issuing equities, right? It is not only about using it to raise capital. The market itself is called capital market. It is not only raising capital. For rest of the holdings, they get a very good value. So they can even pledge the shares they are holding at a higher value and get loan. So the very purpose is not only to kind of raise funds. There are like several purposes. What they already have like good valuation. And again, this is very important. So if the share price rises and the promoters are ready to sell, which means they feel that the value of equity in the public market is far, far higher than what they will be able to generate in the foreseeable future. So promoters offloading the share means obviously the equities are like overpriced, significant proportion. So again, yeah, like very good, very prudent research from your side, Balasubramaniam. I hope that is the reason why you are doing well. And so with that, I'll like invite others to share their experiences. Anybody else? Do you have any questions for others, or any specific aspect you want? So what has not tempted you to kind of trade, or even if you have a significant volume of equities, you could add revenues, right, by means of pledging or like selling covered calls. How do you kind of keep yourself away from these kind of temptations?
Hello.
Yes,
Hello.
Balasubramaniam. Yeah, please.
Also, I could not hear your question. Kindly repeat me. Kindly repeat it.
So what I wanted to ask is, with so much knowledge of the market, what has kept you away from any kind of pledging and generating additional returns for the value of stocks you hold? For example, selling covered calls over your equities or anything. You want to just keep the risk away, or you're happy with your returns? Because the obvious purpose of investing is to maximize returns, right? There are relatively safe strategies which can kind of improve your returns, at least covered calls being one. Because if your equity shoots up, like you can actually like sell off and go away, even if you don't want to take loss. So there are like simpler strategies. So what has kind of kept you away from any kind of, even like this again would amount to some speculation. Even buying an equity itself is a speculation, right? We speculate
Yeah,
that
definitely.
the market has not realized. But what has kept you away from any kind of futures, options, or more risky instruments?
Yeah, okay. Um, Actually, to be very frank, I do not have an adequate knowledge or adequate opening to and among my fellow members and and my advisors. To be very frank, um, they did caution me about before entering into options or day trading and so on, uh, and never to speculate. And also, second thing is never to pledge your stocks. The broking companies usually they give an advertisement. They you have your messages popping up. Pledge your securities to buy this thing. Pledge your securities to buy this thing. Buy another stock. What happens is that when the margin of these stocks actually hit a point to a certain level, these broking companies usually what happens is that they usually sell our stocks even without our knowledge because we have given our consent. So suppose if you have pledged very good stocks and which we have bought at a reasonably good valuation, they usually sell these kind of stocks to mitigate our losses while pledging our shares. Second thing, in case of day trading or going through an options or other thing, it involves, you should put a lot of effort into it, and it involves a lot of speculating, to be very frank. And these kind of things usually take time consuming. It's actually a time consuming process. You have to be on the system the whole time. You have to watch these things. Uh, with our profession in between, I do think that with all my experiences from my friends, I could feel that more or less what return they have achieved during this kind of day trading and other thing, I could achieve with my fund by holding these stocks. So uh, if the exception of a very few, they have made a very good profits in day trading. But I do think that it's not my cup of tea when it comes to options or day trading. Because as usual, to be very frank, I'm a more or less like a conservative investor. I usually stick to my fundamentals and I just go on through the process. And I would like to stay in the market in the longer time as and when as it is possible. Thank you.
Thank you, Balasubramaniam. So it was like amazing insights in terms of how you view the markets, your time horizon, and your research. It was really, really valuable. So we have so many speaker interests, but I think some of them have not joined yet. So we'll invite Dr. Vaibhav sir. Do you want to speak anything regarding your pattern of investing, or do you have any? If any of you have questions to ask to Balasubramaniam or me, you can personally ask. Anybody wants to comment on current valuation of the equity markets, right? There are different opinions. People say that at this level, it's a very attractive price to buy. But there are different opinions because considering if the crude oil continues to stay at the same level and geopolitical tensions continue, Indian equity markets are bound to underperform, at least in a horizon of 1 to 2 years. Does anybody have opinions regarding this? We can discuss that. Balasubramaniam, what do you think about next 1 to 2 years with these geopolitical tensions? And obviously, crude is unfavorable for Indian equity markets, right? So how do you see even IT services may be impacted if India tries to be close to Russia? The kind of inflows in IT sector also will be affected, and US may be apprehensive to give contracts to Indian companies.
Yeah, from usually, as per your question, India is a major importer of all the crude oil and other resources. Uh, Usually, many of these products usually come from Russia and also from other countries also. Since it's a major importer of crude oil, it's essentially a big factor. It's essentially a big factor, and it should be definitely be taken account into the economic process. Um, I do think the inflation is going to be a bit high in the coming years. The prices of our fuel, petrol and diesel, it's definitely be going to be high. There is an actually even when the demand picks up, the supply is going to be get shorter due to the sanctions issued by the US to Russia. And even if India sides with Russia, directly or indirectly, it will be definitely be blow to us because the IT contracts which has been signed by the US will definitely be altered. Uh, I do think when the inflation is going to rise, there usually gets a we usually get a point that the stock prices usually also will rise. But what happens here is that the foreign investors they have dumped our stocks and they are taking their money into the US markets right now. And to be very frank, in the last period of around 30 to 40 years, the inflation in US is currently at around 30, it's around 10 percentage, I think so. The last thing was around nearing 10. So when the inflation rises, goes on higher and higher, uh, it will, the growth of our economy will definitely be, it's not, it will be on a bit of a lower side to us. But I think that doesn't definitely need us to keep investing in, just not keep, we should not, just because we have these things, I think we should not, let ourselves stop investing into, our stock market. We do definitely have other alternative options like, we can go for bonds, we can go for other asset classes in order to diversify our portfolio. At the present time, gold may not be good, but in future, if the war tensions come down, gold may be good. Uh, I do have, you can go in for EV stocks, electric vehicle stocks, which may be, which can be the future of our mobility here in India. So by diversifying our sector and also, by decreasing our dependability on crude oil prices, I think we can, expand our portfolio, and even, as a nation, we can flourish. Just by decreasing our dependability on crude oil from our import side. So I think we can, diversifying our asset classes is a very good factor in case of these times, because diversifying our assets definitely gives us a kind of stability and a peace of mind during these volatile times. Thank you.
Okay, that was a very good response. Like my question is, there is a different hypothesis that at current valuations, Indian equity market, even after this recent correction, it's still overvalued compared to sector by sector, sector leader by leader comparison, even to US markets. This is what I have been hearing. So if you have performed some peer comparison, Indian like top stocks, say IT stocks, Infosys, TCS versus Accenture, they say that the current valuation doesn't, even after the correction, the current prices are not justified. Do you have any views regarding that? Because if you compare the sector leader in IT, say Accenture, they have like huge investments, right? They have investments in startups, they build products, they are not solely focusing on service. Whereas if you see Indian IT players, they are basically service providers, right? They are not creators, or they don't have monopoly, or they don't have anything so as to like boast of. Even if you say Mastech, Persistent, they are predominantly service providers rather than kind of sole like creators of some unique product, or they have motor so as to say they don't have. So do you have any specific views on, I do agree that Mastech has like huge exposure to healthcare and healthcare IT, which is going to only grow. I do understand the pros they have, but it's again service sector, right? They are not creating some radical technology breakthrough that nobody else can give, so as to say the moat and a kind of unique kind of services they alone are able to offer. A new player can easily dislodge them. The competition is at price level, right?
Yeah, hello. Yes, Vasu. Yeah, I get your question. Um, Regarding the valuation of our stock markets, yeah, I do feel that it's a bit overvalued at the present time. It's so even with by going the sector to sector comparison, I could feel 32 PE, 32 years PE. Few stocks have 30, 32, and a few stocks have even crossed around 50 or 60. I do feel that. Um, I usually select companies. In my personal opinion, I do select companies which has brand value. These kind of brands have their own power over the consumers. They can transfer their inflationary prices, the prices which occurs due to inflation, to their customers. For example, Apple is number one. It has, when the inflation goes high, it definitely passes it to the customers. The customers don't mind buying it at a higher cost. HUL, for example, Hindustan Unilever, all the FMCG products, these kind of brands usually, they pass it on to the customers, and the customers usually buy it. These kind of brands are the things I think we can own, irrespective of PE, because PE is what PE is nothing but price by earnings, which usually depends upon the price of the share and earnings of these earnings and of the share which we get. Is usually a ratio as such. The factor P in the numerator, it depends upon the supply and demand of the particular stock. This price of the stock at the particular point of time, it depends only upon this supply and demand, and is also mostly speculative by nature. If the fundamentals of the company is good, I think we need not mind about the PE ratio. As such, I don't mean that you should buy overvalued stocks, because by buying a stock which is of a very high value, comparing to its peer comparison, that means that you will not be able to see profit at a time, even for a period of around 5 to 10 years. So we have to buy a stock which is fundamentally good, and at the same time, the PE price of the stock should be reasonably within this sector. I think that should be our consideration. We cannot have everything under our control, because when we have to enter the stock market, it actually carries some kind of risk with it. How do you minimize the risk? How do you mitigate it? It actually, I think it's much more of a concern here. Valuation, yeah, because I bought Coal India at around the odd price of around 300. I thought it would go high, but it has fallen down. It was actually a bit of a loss to me. But still, I'm holding on to the stock because it's a monopoly. Even though it is under a public sector company, I think it is doing well and it's giving a good dividend yield also, and all other factors associated with it. I do think that uh, the foreign investors, when they withdraw money from the Indian market, as such, when it's happening right now, as we speak, and it has happened during the past 1 month or other, so the share prices will definitely, I think, will come down and down. And at that point of time, I think due to Ukraine-Russia tensions also, I think we can have a very good list of stocks which we can buy in a diversified manner in order to gain from our own portfolio. Thank you.
Thank you, Balasubramaniam. So you are mainly focusing on like pricing power. If any company has pricing power even during inflation, then they are like good companies to kind of bank on, because obviously their earnings will continue to stay up and they'll be able to provide value to the investor. Gauri Shankar, did you understand all these things? And if you have any doubts, you can ask. I think we can discuss a few of these aspects, right? Whatever he has discussed. If anybody has difficulty understanding any of these aspects, so there is no one unique way, one best way to invest, right? Everybody has their own. For example, Balasubramaniam has a very, very long holding period. So he can afford to kind of like pick up stocks at any price, and he also averages, so he never goes in one go. So there are a lot of mechanisms he practices which kind of keeps him immune to the volatility, like short term and long term. So everybody has their own strategy. Yes, Gauri.
Yes, it was very nice hearing Balu's version of this. What can we say? Trading. Actually, what it has taught me is the persistence. See, if you would have seen him speak, he was very persisting in certain conditions. Like he was ready to wait for a longer duration. He told that around I have been waiting for 5 years. So what it teaches for the newbie like me is the persistence is very, very important. See what I understood is there are two types of market. Like example, in the future and options where you can earn money in a shorter duration. But for me, for the newcomers, let me take it as a example as me itself. See, we will be very concentrating on earning in a longer duration for a longer run only. So we will be having a thinking of let us try for 2 more years so that we have a consistent earning. The importance is not the amount of the win, but the winning is important. So he has taught me what is the persistence is very much important in his perspective. So that was very nice to hear his version. Also, it will be very helpful for us if someone teaches about the futures and options and how they are using the strategy. So it will be very helpful for the newbies like us to have an interest in regarding that. Thank you, Vasu.
Yeah, thank you, Gauri Shankar, for the kind words. I think Balasubramaniam has like kind of shared his views, but it is also important to remember that if we as retail investors try to emulate Balasubramaniam's kind of conviction without having adequate knowledge, we are more likely to go wrong than go right, right? So his conviction comes from superior analysis, right? He has superior knowledge of the market, and because of his analysis he is able to hold on. But if we think our analysis is great by studying just the balance sheet or some few aspects of the company and try to hold a stock, we are more likely to lose. Okay. So adanal vandu like just because Balasubramaniam is so Balasubramaniam is
right, Vasu. Actually, I am asking is that everyone has to learn from their mistakes only. In this market, we can have a lot of analysis. We can get brokerage person's advice. We can have personal advices from our own relatives and things. Okay, but the final thing is the decision will be ours. Okay, so what will we learn is we will learn new things every day and day. So what will happen is the strategy he has developed is his on own, and that will get refined over the decades or over time. So everyone's idea or the strategy will differ a minimal bit. So this his idea has given us a bird's eye view that how he is going to perform, and he has been performing for the since his mutual fund starting days. So I think so it will be a very good thing that everyone shares perspective just like Balasubramaniam. Not just to, I'm not saying only for the ideas, but their entire perspective. See, he has told that he has many analysis done by himself, relatives also, and by the persons who known to him. So such analysis are very much needed, and studying of market is very much required. That's what I can. The final point is I want to take it from Bala's view. Thank you, Vasu. Thank you so much for sharing, Bala.
So he has many data points, right? Like, so I'll like kind of try to summarize all the points and share in the group also. So what analysis he does is very, very extensive. That is like even more than what routine even analysts who share stocks would do. Even if you see a complete YouTube video on like fundamental analysis, you won't get all the data points Balasubramaniam is discussing, right? He does more data points than what an ordinary analyst would do. And despite having so much inputs and so much analysis, he still diversifies into kind of Nifty 50 stocks to limit the risk. Right. So everybody should keep in mind before going all in on penny stocks or like some small caps. Okay. It was really, really great to learn from Balasubramaniam. I think our speakers are again taking some more time to kind of turn in. So I think everybody here has a brokerage account, right? At least you have started investing. So which brokers are you using? Balasubramaniam, because you're a long time investor, do you use discount brokers or you use bank associated brokers?
Yeah, yes, Vasu. I heard your question. Yeah, I use actually angel broking as of now, um, because I found their software easy to use, and actually I think it's a bit of it's a bit of convenience to me, because even the brick and mortar house of the office is actually nearby to my home, so accessibility is very good. So I think if I come across any issues, I can go into their office, and I will just clear it off. And I also have a few of my friends working in the office. So in case of any IPO allotments and all, I usually go to this office, and I will get it done with them, because usually going to the persons who are close enough to me, actually I think it's a bit of it brings a bit confidence to me. And also regarding the brokerage, I think it's okay to me, because there is no yearly maintenance fees or something like annual maintenance charges. There are no maintenance charges. And since I am doing only equity as of now, equity delivery only, so the charges are also very minimal. So regarding the terms of usage and accessibility, I chose angel broking over the others, and other instead of other bank associated brokers. Thank you.
Okay, thank you, Balasubramaniam. So where is the angel broking office?
Yeah, the angel broking office, which when I have opened my account is during my post-graduate days, it was actually in Madurai, in Anna Nagar. And yeah, the sub brokerage is actually here in my hometown, Palani. So in case of any doubts, I usually actually visit here, and I will usually make a call there. So actually it's a bit of it's a good access. It has a good access to me. So I got my account open through angel broking. Thank you.
Okay. Do you also own the shares of angel broking?
Yeah, definitely.
Okay.
Yeah, because I do believe that they are having very good returns there. Because many investors, due to their software superior software approach, they are actually having a very good time. I do see many new brokerage like Zerodha and every other thing popping up and every other things going on. But from my standpoint of view, uh, due to very decreased number of technical glitches, I do prefer angel broking, and yes, and I have invested in it because year on year I could see their profit on the rise, and the brick and mortar type of approaches in case of angel broking has come down, and it has mostly been associated only through net calls. And the I do think that many number of employees have been they got out, and the workforce has reduced, and everything has become through opening their account, everything has become through internet, and very few places only in the rural areas and the semi-urban or tier 2 cities they have been concentrating at this time. And I do think that as a network they have been expanding very good in the tier 2 and tier 3 cities. When these stock broking accounts, when these rises, for example, they have risen by around 30 to 40% within the last 1 year. The number of NDSL or even the CDSL accounts have risen by around 30 to 40%, and the majority of these actually I think it came from angel broking. So as the number of accounts rises, as the year goes on, everything I think it usually becomes market driven. Yeah, I think every household will have an CDSL or NDSL account. So at that time, I think we could generally be benefited, and especially from these kind of day traders and these activities, when this turning of portfolio happens very often, it's actually a profit to us. Even if it's a loss for them, it's a profit for them. So I think uh, uh, both the way, I think they get profited. Thank you.
Okay, thank you, Balasubramaniam. That was very insightful. So despite being a long-term investor, you are not like investing through, say, for example, SBI Capital, HDFC Securities, or ICICI Direct, and you've chosen an independent brokerage. Doesn't that increase the risk of, say, for example, default or other things, right? It's not like uncommon for brokers to default or go out of business. So what makes you trust, say, angel broking, which is not also like even among discount brokers, it doesn't even come in the top 3, right?
Yeah.
So that's like a very peculiar choice. What made you trust a broker which is not like top 3 in the discount broking space, not associated with the bank, and still you chose to trust just because of your comfort, because you have the office nearby?
Yeah.
Okay.
Yeah. No. First thing is accessibility. I could feel that if anything goes off the hands, I usually go into the office, get myself sorted out, and I will come back first thing. Because in case of online discount brokerages, you have to make a call. They would connect, then they would go on connect. Then usually the customer care issues goes on and on and on. These kind of activities cannot happen in case of our business. So no, as far as me. Second thing, they have been in business from around 1980s, I think so. So it's a pretty good and a long period of time. Second, what I could feel is that from the starting period, they have actually changed their way of opening, changed their approach towards customer acquisition and every other things. Even now, the brokerages, the brick and mortar, I think it has been reduced to a very, very small amount. But still, in tier 2 and tier 3, what I could see, even in case of tier 2 and tier 3 cities, I could see angel broking coming up. So they focused on opening accounts online in case of tier 1. In tier 2 and tier 3, where online process is still a bit new to them, they kind of opened their office and they are recruiting their acquiring their own customer base as such. Second, the process, I think buying and selling is actually very easy. I don't mind paying them a bit more brokerage compared to others, because the ease of buying and selling is good to me. So even if I pay them extra around 50 or 100 in a brokerage, I don't mind it, because of all these positive things they have got it from them. Thank you.
So here, I wanted to ask a question. So you said that you go directly to their office during for IPO and other allotments. So does that make a difference in allotment, or the IPO allotment is at random?
No, actually, initially, I applied for an IPO. It actually got rejected. I know that it's actually UPI based. There are certain things in an IPO which we must do before it gets hinged off. For example, the UPI, the account which we have given into an UPI. For example, I keep a dedicated bank account for my Demat account linkage, so that I do not mix it with my regular account. So by going into the office, I feel what I feel personally feel is that as and when I ordered, I could actually see it. It actually, even though it doesn't make a difference, a big difference, whatever hassles I could feel, they actually cleared me off. Just like a person-to-person experience, even though it is an old way, there are certain factors when it comes to allotment, like how much we should put, how much is the pricing band, what amount of money should we lock in. If there is any hurdles with the software, if they, at that time, if everyone goes and applies for an IPO, the whole server gets crashed. At that point of time, I could feel that they are of much help in getting an IPO allotment. Thank you.
Okay, so basically, like, you felt that your customer, as a customer, your queries are being addressed in a one-to-one, person-to-person basis, rather than waiting to raise a ticket and being addressed. But I hope like that doesn't make a difference in IPO allotment if you go in person or apply online. But you can at least be sure that, okay, your order is in place. Okay, that was really useful. I think our super investor Parthiban has joined. Parthiban, do you want to initiate the conversation by introducing yourself, your investment horizon, your strategies? So we had Balasubramaniam for a long time. For 1 hour, we have been hearing about Balasubramaniam's investing strategy. So we will have this recording, so which will be shared later, so everybody can listen to it at a later time. Does anybody have questions to Balasubramaniam, to me, or other investors who are here? Any questions?